As India moves closer to stricter fuel efficiency norms and greener mobility, Toyota is betting big on a multi-pathway future, from flex fuels, hybrids to hydrogen. On this edition of Big Business Bet, we have with us Mr. Vikram Gulati, the country head as well as EVP Corporate Affairs of Toyota Kirloskar Motor, to understand the way forward. Hi sir, thank you so much for joining me. Firstly, let's talk about the big bet that Toyota is making. Help me understand, why are you going so big on flex fuel when much of the industry was until lately focused more on EVs? Of course, there have been latest developments in the past couple of weeks, but what is the strategy behind being so big on flex fuels?
Well, I would say we are not big on any particular technology. We are definitely very big on sustainability and wanting to reduce fossil fuel consumption and hence decarbonization to take place rapidly at scale.
So speaking of sustainability, of course, many players are now, going pretty big on it. Some affordable vehicles are now also coming to the market from some of your competitors. But again, cost remains an essential component of going towards a sustainable way. So how do you get an edge over there?
Well, I think one given fact is when you move to a much more sustainable option as compared to the traditional petrol and diesel vehicles, the manufacturing cost is going to be higher. Therefore, it's incumbent upon the industry to take on the responsibility of trying to reduce this gap by either looking at technology interventions or scale play as well as localization. In addition, as has been the case globally and in India also, particularly with BEVs, policy also has an important role to play, because with policy interventions like taxation or schemes aimed at promoting clean technologies, the gap for the consumer can definitely be closed. Ultimately, it's going to be the consumer who's going to make that purchase choice, and if the option does not make economic rational or provide the value, that choice unfortunately is going to be still in favor of traditional petrol and diesel vehicles.
Right, right. And so given the kind of backdrop that we have seen of the war, fuel prices have been rising. So on the policy front as well as consumer adoption, how fast do you think things are moving?
So there is an urgency amongst all stakeholders to see how we can reduce the dependence on imported fossil fuels. And in that context, ethanol provides an immediate solution at scale and at speed that no other energy format which is indigenous and clean can provide.
Right. So how much do you think ethanol can help in terms of reducing the dependence on global imported crude? Any back of the envelope calculation that
Sure, I have some numbers which have been quoted by the government themselves. So from, let's say, last 10 odd years, with E20 coming in, the country has saved something like 1.5 trillion rupees in the forex outgo. Out of that, 1.35 trillion has gone to the farmers. Every year with the older exchange rate, a much more benign exchange rate, the calculation was that every year with E20 you could save something around 50,000 crore rupees of fossil fuel import. That now obviously will be much bigger given the fact that the exchange rate has slightly deteriorated. Going ahead, if you look at the potential, we need something around 1100 crore liters of ethanol for E20 Pan-India program. The ethanol industry, whether it's sugarcane or grains, have been indicating that there is availability of something like 2,000 plus crore liters right away, right now, with additional 500 crore liters also possible in short notice. So therefore, what it means is we could potentially look at 40 to 45% substitution in a very short period of time. But of course, for that to happen, the consumer adoption of flex fuel vehicles and electrified flex fuel vehicles is going to be the key, because that's how you're going to be able to tap this potential. For that, of course, OEMs have all showcased the flex fuel vehicles. Recently, some time back, two major OEMs have also launched their products in four-wheeler and two-wheeler category. I'm sure many others would be now lining up to do so. Government has made a substantial announcement in terms of the rollout of the diesel E85, the E85 fuel, which is going to be used by flex fuel vehicles, as also a pricing differential of 20 rupees. We feel that further enabling policies, particularly on the purchase of flex fuel vehicles and electrified flex fuel vehicles, which help to reduce the additional taxation burden on purchase of these clean technologies, as well as some potential augmentation of this E85 price gap with petrol, can really be the required catalyst that can get the momentum going.
Right. So, sir, that can get the momentum going as far as consumer adoption is concerned. But do you think India has enough infrastructure to adopt this at scale?
Yes. If you look at the supply chain side, like I said, the potential is there for 2,500 crore liters in terms of the processing plants, distilleries. The feedstock is ample. In fact, there is significant huge stocks that are available, which can be diverted. As far as the dispensing infrastructure is concerned, it's not going to be a huge challenge, because it's going to be similar to what you have in case of petrol or diesel dispensation. Tanks have to be, earmarked for E85. The rollout obviously will begin from areas where ethanol is in excess, and therefore that will be much more smoother rollout. And going ahead, as momentum picks up, the entire ecosystem can also scale up. It's not going to be much of a challenge, as we see with perhaps the electrification side, where charging infrastructure, getting that up and going is a challenge.
Right. So, speaking of manufacturing, will auto component makers, will they have to make any changes to any of the components?
Well, yeah, the entire fuel line is not changed, but it is strengthened with required materials to make sure that it can handle higher blends of ethanol. So it's much more corrosion resistant. Similarly, there is required changes in the engine. As also there is addition of sensors and ECUs, which can enable the entire vehicle powertrain to be able to take any mix of ethanol. So it's not a very substantial change, but it is a change, definitely. In addition, the OEMs do have to develop, test, and homologate the vehicle with the FFE requirements.
Okay. And so also wanted your thoughts on the stricter CAFE 3 norms. How do you at Toyota have an edge when compared with other rivals when it comes to flex fuel and hybrid vehicles with respect to these norms?
Well, I must say that the final draft that had come out, which had been shared with the industry, it was a very balanced regulation. It was balanced to the extent that it recognized the virtues of all green technology options, whether it is electricity through BEVs or possible hydrogen in the future, or electrified vehicles such as the plug-in hybrids or the strong hybrids, as well as alternate fuels, whether it is the ethanol, FFEs, or CBG. So very well crafted, very balanced regulation, adequately stringent to stretch the industry, but having enough in it to make sure that the industry is able to also meet it. The only request we had with the government was for an early notification of the final CAFE 3 regulation, which is critical because the implementation starts from April, and we do need some clarity for powertrain mix planning.
So while that clarity is awaited, of course we do not know the timeline. What are the kind of conversations you're having within the industry? Some of the players have already raised prices. Do you think more price hikes could be due in 2026?
This is a regulation which is going to impact the powertrain mix. And hence a specific product changes are not going to be as significant, let's say if it was a BS7 rollout. The prices that you see that are now getting impacted on a larger point of the events that are happening globally and the resultant inflation in the supply chain. So that, if you look at it, is going to be a factor that has to be looked at closely. because the input costs are going up.
We also wanted to understand the follow-on impact that flex fuel vehicles will have. What kind of new income opportunities do you think this could generate, say, for farmers or other industries?
Well, here the most important thing is that when you look at the fuel itself, the entire money is actually going to the farmers. It's not going to the Gulf, nor is it going to any other place from where we import the fossil fuel from. Given the fact that farming in India is a politico-economic issue, where the choice of grains or other such matters cannot be influenced by policy, it is now creating an opportunity not only for farmers to have better incomes, it's also creating economic viability for the entire value chain. Some time back, the sugar industry was in financial distress. Similarly, the government of India was paying huge amount of money in subsidizing export of sugar or trying to deal with losses on account of lack of storage for grains. So all of these things have got sorted out because of the ethanol program.
Okay. And so when we speak of the consumer, many consumers in India, they are still driven by mileage, right? So if flex fuel vehicles, they deliver relatively lower mileage, what's the value proposition for consumers?
That's a very good question, because it is a scientific fact that the energy density of ethanol is lower than that of petrol. So the mileage you get is lower. But ultimately, it's the price per kilometer that you're paying, right? That's what counts for the consumer. So if the loss of fuel efficiency is made up partly by, let's say, some engineering that you could do with the engine to kind of inch up that efficiency, but there's a limit to it. Plus, policy enablers in terms of pricing of the fuel, that's going to be critical. Government has announced a 20 rupee differential. Maybe my own feel is that perhaps 5-7 rupees more is required really to make it work, but it's a very good step in the first starting point. Additionally, you see the manufacturing cost of a flex fuel vehicle or an electrified flex fuel vehicle is more than that of a petrol vehicle. Now currently, with our taxation structure, which is identical, the rates are identical whether it's petrol or for the flex fuel vehicle, inadvertently what happens is the taxation in rupees for a flex fuel vehicle would be higher. So that is an unintended disincentive to the consumer. So government will have to come out with some sort of policy intervention to make sure that the consumer is not paying more rupees taxation for buying a cleaner vehicle. That is absolutely must for securing total cost of ownership benefit for the consumer. Remember, each consumer is a value-seeking, economically rational individual. So unless these two things are done, it is going to be a challenge. But we are confident that government and the stakeholders, including the auto industry and the oil industry, can get together to make it a very positive value proposition for the consumer to go for.
Right. Okay. So speaking of challenges, do you think feedstock shortage or perhaps weaker monsoons, they could disrupt ethanol ambitions of the country?
That's the beauty of flex fuel. It can take any mix of the ethanol. So you could feed it E20, you could feed it E100 or anything in between. And therefore, the variations in supply of ethanol does not impact the consumer. Remember, the real huge potential is not from the first generation of ethanol which comes from crops. The game changer is really going to be the second generation of ethanol which comes from the plant waste like parali, which currently we are burning and creating pollution, right? It's a technology that's tested. Right now there are challenges of economic viability for ethanol that is produced from second generation, but we believe with, again, adequate and right policy intervention, some technology innovations, and with carbon markets coming into play, that can also become economically viable, not only for the road transport, but most importantly as SAF, sustainable aviation fuel. So going ahead, there is huge promise for ethanol and CBG to be clean energy formats for the road transportation sector.
The road to net zero is unlikely to be a one-size-fits-all journey. Whether it's hybrids, EVs, hydrogen or flex fuels, the winners will be decided by scale, affordability and infrastructure. That was Mr. Vikram Gulati of Toyota Kirloskar Motor on Big Business Bet.